All right, let's go over the trades on the day. Fairly choppy day. Let's look at the results here. Get those minus 550 right now on the 200K portfolio, minus 350 on the 50K portfolio. Open position still about to close. The stock market closed. The futures are still trading. So it could vary between now and the actual exit or close on the session. It is currently 4:10 Eastern Time, 3:10 Central. Let's look at the advanced decline line has been bullish, but the market has overall been weak. And so we see that we're seeing divergence between market internals and the indexes. As the tick was fairly sideways. We've basically had a choppy week in the stock indexes except for Wednesday's sell-off. Let's look at the highlight of the day, though, was Soybeans Day Trader 3. This has been a choppy market, hard to catch a trend. Caught it today, up over 1,000 per trade. So nice trade on that. Soybean swing up on the day, holding this position overnight, up over $700 per trade roughly. And we've got, let's look at the 50K portfolio. 50K portfolio has a soybean swing trade as well. Holding the gap continuation reverse trade, stopped out on SR counter trend 3 crude oil. Let's go back to the 200K trades. No trades in copper, no trades in silver, gold reversal plus about 900. We were short coming into the session. Hit that profit target, got short again, and then it reversed on the jobs report. And the market reversed, and we reversed. We got long right in here. So a flurry of trades, and we're long up on the day, around $900 per contract. That's only gold trade. Natural gas, no trades. Crude oil, profit in SR counter trend 2. Stopped out on SR counter trend 3 and gap fill in reverse as well. Crude oil tends to be a tricky market. It's moving higher, but it pulls back a lot. And so it kind of gets running. Stealth trends that get going right here at midnight, between midnight and 6 a.m. And the day session, it's choppy, and then it pulls back. And so looking for a more pronounced trend in crude oil to move higher or lower. NASDAQ, not a lot of trades in NASDAQ. We have the 60-minute breakout trade right here, trying to take the long trade. Not a lot of bounces this week since the FOMC. We had just taken a look at the week in general in the terms of the NASDAQ. Monday, really choppy right here. Tuesday, this is the 24-hour session, so the bigger range bars of the day session. Really choppy, and then a sell-off. And then Wednesday, choppy, and then FOMC, sell-off. And then Thursday and Friday, very choppy. Lots of overlap. You see all these bars overlapping one another. Here's one big down bar, but the overlaps on these tend to overlap the ones before the big bar. So there's no intraday separation in prices. And EVP1 captured a trade. It was short for a small trade of about $80. Gap continuation in reverse, up about $500. Was up really well right here. I've experimented with different exit techniques. We had this huge trade over $6,000 on Wednesday, and the night before I had experimented with exiting with a $2,000 profit target, back testing it, and it looks better. This strategy works better if you exit with a $2,000 profit target once you hit noontime. But I did not. We were due for, in my opinion, we were due for a trade like this, so I did not put that exit in on that. Captured that big trade. Today, that $2,000 profit target would have worked well. You have to be consistent. It's hard to know, because on Wednesday you would have been disappointed had you added that $2,000 profit target, and today you would have been happy to have had it. The net gain on both of these days is higher without it, and it's hard to know when to use it and when not to. And so you kind of have to be consistent in your trading, doing a lot of the same things same things you typically do. You can't just change it. You can't just change your rules, or you'll be out of sync. You'll end up doing the wrong thing at the wrong time. So you have to be consistent. Gap continuation in reverse on the ES, down about $500 per contract. Selling here at the end of the day. Just a really weak market tick count trend down on the day. 60-minute breakouts on its second loser of the day. So these long trades on the ES are hurting us. 60-minute breakout short was profitable. The first trade was a loser. The second trade was a winner. Just lots of bounce back, though. No follow through on the selling. Like I said, the market still thinks that this is a dip buying market, and so it's acting like a dip buying market still, and acting like it's just a normal pullback, and that we're going to run up to new highs. And I guess the Fed pivots. We'll see. Feels a little different to me with higher interest rates. You see the bonds selling off. So choppy first week, challenging first week. And sometimes that happens. We've talked about how the first week of a month can be choppy instead of trendy, and then the middle of the month can be trendier. So still looking for some good trends in 2022, even though we've had a first choppy week to start out the year. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.